D.R. Barton Jr. Let's talk some tech. And in the battle between Amazon and Alibaba, you choose Alibaba. Why is that?
Well, then, as you know, Greg, the battle is not really on the commerce front, but really for investment dollars. So where do you want to put your money? And everybody knows the Amazon story pretty well. It's been around the U.S. for a long time. Alibaba, though, I think is one of those legacy stocks that you could own for decades. I think it's got that kind of growth. They are probably a better buy now than they were at the IPO because we've had first post-IPO earnings out. They showed amazing growth, 53.7% top line growth. They showed that mobile is now 35.8% of their total revenue take. And so they've done a great job in mobile. I think that's the place with the growth in China that you would want to put your investment bucks.
Meanwhile, the next battle you're watching is Google versus the European Union. The European Union was pretty tough on Microsoft. Do you think they're going to be equally as tough on Google?
I think they are, and they've already done these things like the right to be forgotten. It's just really a drag for Google. They want now Google to be starting to pay for things that they've never had to pay for anywhere else for links. So they're going to be doing a lot of things that are going to give some headwinds to Google. And I love Google as a company. They're so strong. Their cash flows have grown 9, 11, 14, 18, 21 billion dollars a year over the last 5 years. Google is a great company, but the headwinds from the EU, I think, are going to mean you can buy them about any time this year for the long term.
What about Apple? Will the law of large numbers catch up with Apple? How big can they get?
Well, Apple is another one of those juggernauts. They're just a cash flow juggernaut. 21.8% profit margins on hard stuff, on stuff that would hurt if you dropped it on your foot. That's unheard of. And they're going to bring out the watch this year. Will they be able to execute with the watch? That's going to be a big tell. So their whole thing is Apple versus themselves. Can they execute? Can they market as well as they have and keep those margins up there? And it still remains a buy until proven otherwise.
And then finally, Tesla. They've been having some problems in China lately. Can they maintain that valuation? Because it's still a highly valued stock.
Tesla is a really interesting thing. Love the CEO, love the product. I think they've got some great innovations coming up for this year, for 2015. But it's sort of Tesla versus common sense, if you will, if we're going to keep that same theme. Will the batteries last? Will the leasing program that they're doing be the right business model? Will they be able to grow like they want to? Will they be able to get places like China to say yes? And until proven otherwise, this stock is just going to be a buck and bronco. It's going to go up and down and up and down. And if you like it long term, buy it on the dips. And if you don't like it long term, I can't blame you there either. I don't have any of my money in Tesla right now.
All right. Thanks a lot, DR.
Appreciate it, Greg.
Thank you for watching The Street.